Hello, everyone. Thank you for joining us today and welcome to this educational presentation where today I want to talk to you about next level trend trading. This is actually a brand new course that we'll be teaching very soon. And this is for students that really want to take their trading to the next level. So welcome once again. My name is Stephen Primo. I am the president and founder of Specialist Trading. If you're new to my webinars, I've been trading now for roughly 5 decades. I started trading on the floor of the Pacific Stock Exchange. I was on the floor for 16 years, and 9 of those years I was a specialist. Specialist is someone who made markets in roughly about 50 or 60 stocks. So I did that for roughly 9 years. I traded through the crash of 87 and the bull market that followed. And if there's one thing I've learned in my nearly 5 decades of trading, the one thing that will sustain you is sound, solid education. That's what you really need to be looking for. Solid education. And the good news is that's the service we provide. I've taken all of the tips, techniques, and everything I've accumulated in my nearly 5 decades of trading, and that's what we teach our students around the world in over 115 countries and in every state in the United States. So we're going to be talking about a brand new educational packages that we'll be presenting very shortly today. Now, before we begin, we are required to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results by applying what's going to be in the trading package, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And since we are an educational company, all examples are strictly for educational purposes only. Now, if you'd like to get more education on a daily basis, a couple of ways to get that. First one is by following us on X or Twitter, formerly known as Twitter. There's our handle right there. I would suggest copying that down because every day I post between 5 and 7 different snapshots of signals that our methods have generated, also little bits of financial wisdom. And if you'd like to get more content following us on YouTube, hit the subscribe button. We are currently broadcasting on YouTube right now to all our followers. So a way to be sure that you'll get a lot more of this is to hit the subscribe button as well. Okay, with that stated, let's begin today's educational presentation. And as I so often do, I like to start out by something that was taught to be my mentors, and that's today's theme. And it's simply this. The secret to trading success is to simply want what the market wants. I mean, it really doesn't have to be more complicated than that. It's about as simple as you can get it. Because really, think of it. The only reason you lose money is because you're wanting the market or whatever market you're trading to do something than what it wants to do. You want the market to go down. Maybe you bought some puts or some type of spread strategy to the downside, and it goes straight up, right? You lose money. Or you want the market or whatever you're trading to go up. Maybe you bought some calls or you bought the actual stock of the market, and it goes down. So basically, you are not in sync, or another way to say it is you don't want what the market wants. So we have to learn what the market wants. That's the main essential of trading. It doesn't get any more complicated than that. As I said, the essential to trading and to becoming a consistent trader is to know how to want what the market wants. And that's the reason why we created this new package, the Trading Essentials Package course. Now, this course will cover the essentials and the foundation for consistent trading, which is based on trend trading. Remember, a trend is simply another way of seeing and displaying what the market wants to do. Remember, we want what the market wants, so we have to be able to identify the trend. This is how we become consistent traders. Now, this course is for traders who have learned the basics of what we teach already, such as the dynamic duo, but have now decided to take their trading to the next level. Now, for those of you who aren't familiar, the dynamic duo is one of our most basic as well as popular trading packages. It's more systematic and more pattern recognition in value because it's something that's really simple and based on a pattern and also based on rules. But it's the first level in taking your trading to higher depths here. So once you've achieved that, a lot of our students have said, okay, Steve, I've got that under my belt, but you know what? I want to go a little bit further. I want to take my trading to the next level. That's why we formulated the Essentials course. Now, there are 2 main essentials of trend trading. Since we're going to be focusing on trend trading in this package, we have to cover the essentials, and we boiled it down to 2. The first one is entering in advance of a strong trend. Now, we're not just looking for any trend. We want to find a strong trend. That's the low-hanging fruit. That's where the market goes either straight up or straight down very quickly. And what we want to do is not be able to identify that in hindsight. We want to enter in advance, often before it appears as if the trend is even taking place. So that's the first essential we're going to be teaching you in this course. The second is how to exit in advance of a trend change. Now, a trend change doesn't necessarily mean that it's a strong trend change. We just want to know that we are exiting at the most opportune time before the energy seems to dissipate. In other words, if we're long, we want to get out of our long position at or near that high or the closest we can to that high before the trend kind of dissipates and maybe it goes sideways, maybe it goes down a little, but we just want to be able to get out and hold on to our profits. You see, that's one of the main things a lot of students complain about. They said, Steve, I had a great trade. It was going my way. I held on a little bit too long. I didn't get out. And sure, maybe I exited with a little gain, but it wasn't enough because I had a lot at one point on paper. And then I got out and I just had not that much to show for it. So we want to get out in advance of that energy dissipating from the trade we're in. Now, as traders, we can achieve this consistency and being in sync with the market and wanting what the market wants by applying two of our best of the best trading tools, specifically designed for these two categories. So let's talk about section 1, which we'll be covering in the essentials package. We're going to be talking about how to enter in advance of a strong trend. And section 1 will be applying one of these proprietary trading tools. Let me share with you some examples here. Here's one in Apple coming in the start of this month, August. As we can see, the market was going lower, right? So obviously, there's some type of short-term downtrend. And then this happens. Now, a lot of students will say, well, yeah, but we're in a downtrend. That's maybe just a pullback, or maybe that's just a aberration, just a one-day up bar before we go lower. Oh, excuse me. But based on the trading tool that we will be teaching you how to apply, it actually was identifying in advance a strong trend. And this would be one of the most opportune bars in which to purchase. And as we can see, in the next week or so, the stock shot up 22 points. Here's another example. Now, this one is in SCLX. Not much happening here at all. It looks like it's just going sideways to up a little bit, right? But based off this tool, it was telling you that most likely there's going to be a strong trend to the upside. Here would be a very opportune place to enter in advance. And as you can see, coming into August, this last couple of weeks, the stock was up 15 points. And a lot of people would say, well, 15 points, that doesn't sound like a really strong trend. Remember, this wasn't a very expensive stock. In fact, that's a 200% price gain. Think of that. Think if you're trading NVIDIA. Think if you're trading Tesla. And in 1 month, you can potentially capture 200%. Here's another example. That's to the downside. Let's say you have some puts, or maybe you've been shorted GLOB. All right, it's going lower. You say to yourself, well, gosh, it looks a little oversold. That guy in that chat room says it's gone down too quickly. Maybe I should get out, take my profits. But at this point, this tool is actually telling you this is a good point to enter. So you actually were lucky you got in earlier, and you could have potentially captured 15 more points to the downside coming into last week. Now, here's a weekly chart looking at an entirely different time frame, entirely different stock. This is NVIDIA, but looking at a time frame going all the way back to May, from May up until this month. Okay. In hindsight, sure, it's really easy to see that it's in a strong uptrend. But how could we have known that in advance? Well, remember, we're going to be covering this in advance. And based off this bar right here, you would have known to enter into the stock, and potentially you would have been able to capture upwards of 50 points coming into the first week of August. Now, we just looked at a weekly chart. What about if we go to intraday time frame? We know we have a lot of traders who like to trade intraday. Well, here's a 3-day chart of the spiders. This was just last, I believe this was just last Friday. Yeah, less than a week, 1 week ago. All right, doesn't look as if this is moving at all, right? Based on this 3-minute chart, it's just going sideways. But look what happened here. On the opening of the 22nd, which was Friday, it gapped up. Now, a lot of students say, well, Steve, I can't really buy on a gap up like that because, it's already gone up too quickly. Well, sure, you may be right. We don't know yet. But this tool, this proprietary tool that you will get in the course, actually identified that this was the most opportune place to enter. This was not the end of a trend. This was the beginning of a strong uptrend. And as you can see, the spiders went up 10 points in the next 2 or 3 hours. Now, it doesn't seem like a lot, 10 points once again, but we're looking at a 3-minute chart, and 10 points on the spider was comparable to 800 Dow Jones points in just one day. So that was a pretty strong little trending signal you could have got on an intraday time frame. Let's look at a directionless market here in THAR. This is where we're always taught, well, we should stay out of these markets. There's absolutely no trend, right? Well, you may be right. But remember, our job in section 1 of this new course is to be able to identify in advance of a strong trend, oftentimes before it's even displayed. And if we get too caught up in this directionless market right here, we would have missed that this indicator said this was the bar you should be entering on, because for all intents and purposes, this is the beginning of a strong trend. Now, let's say you would purchase there. Well, nothing much really happened in the next 5 days or a week. But look what happened after that. The stock shot up 5 points. And once again, this was a very inexpensive stock. That was a 300% price gain in a little over a week. As we often say, imagine NVIDIA or imagine Tesla gaining over 300% its value in a little over a week. You'll be very happy with that. Well, it could be the same thing with an inexpensive stock like THAR. So we can look at an inexpensive stock, a small move, or we can look at a big move like an NEGG. As we can see once again, there's absolutely no indication that this wants to trend one way or another. But this proprietary tool actually said, based off this bar, a strong uptrend is most likely to take place, and this is the bar you should be entering on. And look what happened. The stock shot up 105 points coming into last week. So this is the basis of what we'll be covering in section 1. Now let's move on to section 2. And in section 2, we'll be covering how to exit in advance of a trend change. In other words, what we want to do is get the most bang for our buck. If we're long and it appears as if the trend is dissipating, or even if it doesn't appear at all, we want to be able to get out and capture as much gain by exiting before the trend changes. Now, it doesn't mean this will be going to strong trend change to the downside, straight down. Maybe it could be, but we just want to be able to get out. We don't care if it's a strong trend or not. Same thing to the downside. Let's say you're short or you bought some puts and you want to get as much bang for your buck. You want to capture and hold on to as much of your gains. Well, obviously, you want to be able to exit in advance of being short, cover your short, get out of your puts before we start to go back up. This is what we'll be covering in section 2. So we want to hold on and save as much of our gains and hold on to as much as possible. Let's say we were long PLTR. This has been one of the stocks that people have been talking about this past year, how it's been going up rather nicely. So based off this, there's no reason to sell this, right? It just keeps going up. But look what happened. On this bar, we went lower and we closed a little lower. But you could say to yourself, well, gosh, why should I exit? We did the same thing here. We went a little lower, went up, made new highs, went a little lower here, made new highs. So how is this any different? Most likely in the next week, we'll be making new highs, right? Well, in section 2, with the proprietary tool we'll be sharing with you, it actually told you, no, this is the bar you should be exiting on. Had you done that and you got out of your long position, well, you could have saved yourself 40 points, because look what happened in the following week. Here's an example in UNH. Let's say you had some puts or some type of spread strategy to the downside in options, or maybe even were short the stock. And you're saying to yourself, wow, this just keeps going lower and lower. Well, look what happened. On the next bar, it went up and then closed lower. And you say to yourself, well, that's all right. It did the same thing here. Closed, went up higher, closed lower. Closed, went up higher, closed lower here. So there's nothing really to worry about. But this proprietary tool, which we'll be sharing with you in section 2 of the Essential course, actually identified this as a place to exit in advance. So you want to be able to hold on to as much gains as possible. You would have exited your short position, whether you had the puts or some type of spread strategy with a downward approach, or you're actually short the stock. because you could save yourself 60 points in the next 5 days. See how simple this is. Here's another example, looking at a weekly chart, once again, this one time in FN, okay? You've got a really nice profit. You're saying to yourself, wow, this just keeps going up higher and higher and higher. I feel really good about myself. I have a nice profit here. But once again, this tool generated an exit signal telling you that this is the bar you should be getting out on, remember, on a weekly basis. This was at the end of the week. And you could have saved yourself 50 points, which happened just in 1 week. This was all just a couple of weeks ago. Here's another example, but a different time frame. This is a 15-minute chart of Netflix, okay? Say you're long this, you're doing really well. You got a nice little profit here. Maybe you bought some calls, whatever you want. Maybe you have an odd lot of the stock, but you're doing well. And based off that one down bar, this tool told you have to exit the market now because most likely the trend is changing. Doesn't mean it's a strong trend, but it just means the energy is not going to be as strong as possible as it was before. And you saved yourself 15 points. Remember, this was a 15-minute chart. This was not a daily or a weekly chart. This is an intraday chart where you could have saved yourself 15 points. Or we can go to an entirely different market, an entirely different time frame. Here's a 4-hour chart of the Australian dollar for all you currency pair traders here. If you had been long this currency pair, well, you've got a nice profit, but the tool told you to sell or exit right here. And you saved yourself 130 pips in the following days. That's close to $1,300 per unit you could have potentially saved yourself. All right, let's talk about the course highlights once again. This is an entirely new course package. We're going to be focusing specifically on next level trend trading. It's emphasis on trend trading only. We're not going to be talking about trying to pick tops or bottoms. We're not going to be talking about a systematic approach to a strategy. This is talking about how to identify getting into advance of a strong trend and getting out in advance when the trend seems to be dissipating. But the way we'll do this is by sharing with you and teaching you how to apply 2 of our best of the best trending tools. You'll get that in the course. Now, you'll also have scanning capability. You can scan for these setups or when a trend is about to change or about to begin simply every night after the close if you'd like. And then finally, to follow, we will have live teaching classes to follow as well. Now, a lot of students say, Steve, you know, I'm a trend trader, but I always get caught when news comes out. So, Steve, doesn't news affect the trend? Well, sure it does, but we have found out by using our tools and our methods that oftentimes when news events do come out, we are already in sync with the direction it's going to be going based off the news, because everything we base our methods on are based on market behavior. And I was taught some 5 decades ago that market behavior will often tell you in advance what the market wants to do. So even though this is not a 100% guarantee that you'll always be in sync with the news, we have found out that oftentimes we are in sync more than not with the effect of the news. For example, we all know that Cracker Barrel stock has been in the news as of late. In fact, on the 19th, just last week, it came out, Yahoo reported that Cracker Barrel stock dips after rebranding backlash. Cracker Barrel is facing widespread backlash after rolling out a new logo and plans to update its restaurant to a more modern style. Now, on August 19th, the chain restaurant announced changes to its logo and menu as part of a campaign titled All the More. Now, despite the chain's excitement in its announcement, the public was disappointed and even outraged by the change. Customers were so upset, in fact, that the stock plunged and the chain shed almost $100 million in market value. This happened on the 19th, just last week. There was a lot of backlash about rebranding, okay? Now, if we look at the chart, let's say you were long Cracker Barrel and you're doing very nicely. Maybe you purchased down here, and just a month ago, you were doing very nicely until all of a sudden the news came out right here, and then we gap down to make lower lows, okay? So obviously, you've either given away a lot of your profit or you perhaps have a loss on your hands. Wouldn't it have been nice to sell somewhere towards the top? Well, once again, in section number 2, we would have used our exiting tool that warns us and alerts us in advance of a trend change. And you could have exited Cracker Barrel right here, saving you roughly 18 points potentially. So yes, news came out, but we were already out. So that's the beauty of when your methods and indicators are based on market behavior. So oftentimes students say, gosh, the indicator I use, it's too late. By the time I get out, I've lost a lot. By the time I get in, it's too late. It's already peaked. Well, our tools are really designed to get you in and out before the trend changes. Take advantage of our new Trading Essential package. As I said, this is a brand new course, a brand new package, and here's how to take advantage of this. Contact my sister site, Pro Trader Strategies. You can email them at trading@protraderstrategies.com. I would highly recommend giving them a call at area code 310-598-6677. They have trading consultants managing the phones right now. They'd be more than happy to answer any question you may have, talk to you about early bird pricing, or give you some type of discount as well. They're very flexible. They're willing to work with you. And especially if you've been a longtime student of ours and customer of ours, they're more than happy to be flexible with you and give you some type of great offer or great discount. Now, if you open up the chat page, if you go to the little Zoom page icon list there and you see where it says chat, just click that on and a link has been posted there. That is the link to the info page. You'll learn more about this essentials package. You can click that on. You'll get a lot more info as well. Okay. So we have a couple of minutes left. If you have any questions, now's a good time to ask. Just go to your chat little icon there or the question and answer, and I will be happy to answer any of these. We have one question here. It says, Steve, are you sure this can be applied to any market? Sure. And as I often say, it doesn't matter what market. It doesn't matter what time frame. Because when your tools are based on market behavior, you see, market behavior doesn't know if it's looking at a stock. It doesn't know if it's looking at a currency pair. It doesn't know if it's looking at crypto. It just looks for these conditions and these requirements to be met. And that can also be on a 5-minute chart. It can be in a weekly chart, the way we showed you, a 4-hour chart of currency pair, or a 1-hour chart of the E-minis. It makes absolutely no difference. But where the conditions are met, that's where you'll see the triggers and the setups in advance. So yes, it makes no difference. It can be on any market and any time frame. That's the beauty of all of our methods. They're easily transferable onto any market. So you don't have to, like so many other websites caution you. They say, well, you have to buy another one of these packages for currency pair trading. You have to buy another one for stock trading and another one even for crypto. No, we don't believe in that. We want you to be able to use the same thing on all markets, okay? Someone's asking about when will the live classes take place? Well, we haven't decided yet because this is our first actual announcement about this. And so once we get more and more feedback, response, then we'll be able to decide. Oftentimes it's within the month, okay? But I would give Pro Trader Strategies a call. Remember, there's absolutely no obligation. They're there to work with you. They're very easy-going, and more than not, they'd be happy to answer any question that you may have. Give them a call at area code 310-598-6677. Okay, as we close this educational presentation and take one last look at our disclaimer, I just once again want to thank you so much. I hope you learned a little bit about how we feel about the trading essentials. Remember, we are first and foremost an educational company with our entire goal of simply educating you so that you can take your trading to the next level. And I feel confident that the Essentials course will be able to do that for you. Thank you so much for listening to this presentation. I hope to see you in the Essentials class. Bye-bye.